Welcome to our Unit 2. In our Unit 2, we'll be looking at cost classification. Now, under cost classification, we have different ways of classifying costs. 8 different ways of classifying costs. Number 1, we can classify costs by their elements. Number 2, we can classify costs by their nature. Number 3, we can classify costs by their function. Number 4, costs can be classified by their behavior. Number 5, we have classification by responsibility. Number 6, we have classification by nature of operations, by operations. Number 7, we have classification by management influence. And lastly, number 8, we have classification by decision making. So there are 8 different ways to classify costs. So we are having 2 items in this case. We have what we call costs and we have what we call classification. So what is cost? Cost is the sum of expenditure incurred in order to make a product or to offer a service. On the other hand, classification means analyzing costs into certain groups, grouping of costs depending on their characteristics. So let's look at the first classification of costs. We have said the first classification is classification of costs by their elements. When we classify costs by their elements, there are 3 types of costs. We have number 1, what we call material costs. Number 2, what we call labor costs. And number 3, what we call expenses. What are materials? Materials are physical inputs to a production process. On the other hand, labor are the salaries and wages paid to our employees. And lastly, expenses is any cost that is not material or labor. So any cost that is not material or labor is called an expense. The second way to classify costs is by their nature. When we classify costs by their nature, we have 2 different types of costs. Direct costs, which are also known as prime costs or primary costs, and indirect costs, which are also known as overheads. So what are direct costs? Direct costs are costs that are traceable to a specific cost unit. Direct costs may include cost of materials, raw materials, direct cost of labor, and even direct cost of expenses. On the other hand, we have indirect costs. Indirect costs are also known as overheads. These are costs that are not traceable to a specific cost unit. The third way to classify costs is by the function of costs. Under function of costs, there are 2 types of costs. We have what we call production costs and non-production costs. What are production costs? Costs incurred to make a product. But we also have another definition of production costs as costs incurred from the time you are buying raw materials until when the finished product is made. On the other hand, we have non-production costs. Costs incurred to support the production process. Or the second definition is costs incurred after the finished product has been made until the product is sold to the final consumer. We have 4 types of non-production costs. The first type is selling costs. The second one is distribution costs. The third one is administration costs. And finally, we have finance costs. Our next classification of costs, which will also be in our Unit 3, is classification of costs by behavior. So when we classify costs by behavior, we have 4 types of costs. Number one, we have what is called a fixed cost. Number two, we have what is called variable cost. Number three, we have what we call stepped cost. And number four, we have what we call semi-variable costs. Let's start with fixed costs. What is a fixed cost? A fixed cost is a cost that remains constant throughout the activity. Cost that remains the same. It does not change even if you produce more. The second type of cost is variable. Now, this is the opposite of fixed. A variable cost is a cost that changes with a change in activity. As you produce more, the cost also increases. That's a variable cost. Now, when we talk of semi-variable or semi-fixed or mixed cost, is a cost that is both variable and fixed at the same time. Part of it is variable, another part of it is fixed. And lastly, a stepped cost is a cost that is constant up to a given activity level, beyond which it changes, then remains constant for the next bracket of activity. Our fifth way to classify costs is by responsibility. Now, responsibility focuses on what we call centers or departments. We have four types of departments in an organization. We have what we call a cost center. Number two, we have what we call revenue center. Number three, we have what is called profit center. And lastly, we have what is called investment center. So what is a cost center? A cost center is a department or center where only costs are incurred, where we only spend. The manager is only in charge of expenditure. A revenue center is a center where only income or revenue is earned. We only bring in money. No money is going out. The manager is in charge of income only. On the other hand, a profit center is a center that combines number one and two. Is a center where costs are incurred and also revenue or incomes are earned. And lastly, investment center, the starting point, it's a profit center. A part of it, from it being a profit center, investment decisions such as acquisition of non-current assets are made in that particular center. The sixth way to classify costs is by influence of management. Under influence of management, we have two types of costs: controllable costs and uncontrollable costs. Under controllable costs, these are costs that are within the influence of a certain manager. They can be managed by a certain person. It refers to costs which can be influenced by the actions of an individual manager. On the other hand, uncontrollable costs are costs that cannot be influenced by the actions of a certain manager. The seventh way to classify costs is classification of costs by operations. When we classify costs by operations, these costs can either be avoidable costs or unavoidable costs. Avoidable costs are costs that can be done away with, eliminated by changing the way we operate. For example, if we introduce a new technology in a bank, the internet banking can replace tellers in a bank. So the salaries of a teller are avoidable because if we introduce internet banking, it replaces the teller. On the other hand, unavoidable costs are costs that not be changed, cannot be replaced by changing the way we operate. For example, salary of the CEO. The CEO must be there whether we introduce technology or we don't have technology. So the salary of the CEO is unavoidable. Finally, we classify decision making. Under classification of costs by decision making, we have two types of costs. We have number one, what we call relevant costs, and number two, what we call non-relevant costs. What are relevant costs? Costs that affect our decision making. In other words, costs that a manager will consider when making a decision. For costs to be relevant, they must have certain characteristics. The first characteristic of relevant costs, costs should be future costs, costs to be incurred in the time to come. Number two, the cost must result into cash flows. Number three, the cost must be incremental. Number four, there is the concept of opportunity costs. And number five, the costs are variable. On the other hand, non-relevant costs are costs that do not affect our decision making. And that brings us to the end of this unit. What have we looked at? We have looked at definition of costs, sum of expenditure incurred in order to make a product. We have looked at classification, is the grouping of costs. And then finally, we have looked at 8 different ways of classifying costs. How do we classify costs? Number one, by elements of costs: materials, labor, and expenses. Number two, by nature of costs: direct and indirect. Direct is also called prime costs. Indirect is also called overheads. Number three, function of costs. Functions can either be production or non-production. Under production, we have 4 types of costs: selling costs, administration costs, distribution costs, and finance costs. We have also looked at classification by behavior. We have 4 types of costs: fixed costs, variable costs, semi-variable costs, and stepped costs. We have also looked at number 5, responsibility. Responsibility, we have cost center, revenue center, profit center, investment center. We have also looked at by operations, classification by operations: avoidable and unavoidable. And we have also looked at classification by management influence: controllable and non-controllable. And then finally, we have looked at classification by decision making. Decision making can either be relevant costs or non-relevant costs. And that brings us to the end of this unit on cost classification. Cost classification is an important topic that will now affect all the subsequent units. Let's meet in our 3rd unit, which is cost behavior. Thank you.